Welcome back to the channel, and today here with another wonderful video. And this video is actually for those traders who don't really have that enough patience, to wait for setups that looks like swing trading or day trading. Like they want something that kind of like a bit of scalping, not scalping, but not also day trading, kind of like it in between, and this is the perfect strategy for you guys. And just listen attentively, and yeah, let's get into the video. We are going to be focusing only on the 1 minute time frame. We don't need any other time frame for this strategy. So on the 1 minute time frame, we want to see first, let's start with this bearish move right here. We want to be on a bearish trend. We want to be on a bearish trend, and let's take this for example. The first thing we are looking at is a valid break of structure. A valid break of structure is a valid high, a swing high. That structure must have a swing high and a swing low, or a swing low and a swing high. It must be valid. It must be a swing. Like you see how this candle right here is lower than this one and this one, and this one right here is higher than this one and this one. So these three candle formation is a swing high. These three candle formation is a swing low. So we want to see a valid swing high and swing low break of structure, and we have it here. Once we have this structure, we want to see another structure. We want to see another valid structure. Now, as you can see, this is a swing low right here, and this is a swing high. Here we have another valid structure. Now this structure right here, let me just, this structure right here is not valid. This structure right here, this one is not valid. We are looking, once we have that first break of structure, and we are looking at a bearish example. Once we have that first break of structure or second break of structure, it doesn't matter, but we must have a break of structure before we anticipate what we are trying to trade. So now we have this break of structure, so now we can anticipate a setup. So once we have the break like this and it forms a low like this and starts to retrace back, that low, we have to wait for price to break it to form a second or a third or fourth break of structure. It doesn't matter, but we must mark the first one, not the very first break of structure of that trend, but we want to see a break of structure like this before we start anticipating what we are trying to trade. So now we have this break of structure. So now, since we have this break of structure, whatever thing that is going to happen next, we can anticipate our setup. So this break of structure that we have is kind of our bias for the setup. So now we have this price moving high. You see how this high did not take this one. That's what we are looking for. So price went higher, respected from this other block, and came back and broke that low. So now we have 1, 2. So what we are looking for, we are looking for price to go higher and break and sweep the high of this structure. This is the high. We are waiting for price to sweep the high of this structure and break the low that formed this structure. You see, so this is the low of this current structure. Now we have this we have this, but as you can see, price swept that high but failed to break this low. So since it failed to do that, there is no setup. There is no setup here. So we look for another example. So this current bearish trend did not give us what we are looking for. So we go higher. We are looking for where price did what we are looking for. Right here on this bearish move right here, first we have this break of structure right here. Then price, because it is valid, because you see this swing, you see the swing high is valid, and there is a swing low, it's also valid. So we have this break of structure. Price formed the high of the structure, which is here. Price retraced lower. You see how this low did not take any low, and price broke structure, confirming our second structure. So now we are looking for price to sweep this low and shift structure above this high. So now we are looking for price to sweep the low and break the high of this structure. So this is a continuation trend. So once we have this, we want to see fair value gap within the range of this break that swept that structure. We want to see fair value gap. So right here we have this fair value gap. We have this fair value gap. Right? So now our entry on the base of the gap and our structure is going to be at this low. Why we are using this low? Simply because we are anticipating price to respect a fair value gap or a valid order block. A fair value gap or a valid order block. And right here you can see the valid order block here on this setup is this block right here. This is the valid order block of this range, and as you can see, price did not reach for that level, but rather respected this fair value gap right here. We could target for 1:3, 1:4, and you can see that price, it was a beautiful setup right there. So what we are looking for, let me recap. First, on the one, I want to see a break of structure like this. This is a bullish example, a break of structure. I want to see another break of structure. I want to see price come sweep that break of structure and create another new break of structure. And once we have that, we want to look if we see a fair value gap. We enter from the first fair value gap we have, and our target is going to be at an order block high. Yeah, there is this order block right here, so that's why I'm placing it here. If there was no order block here, I would have kept my stop loss here. So because of this order block here, this is the reason why I'm keeping it there. So let's look for another example. Okay, we have this shift here. This is a valid swing high right here and a valid swing low. Now we have this shift. We saw our price came back, did not take this low, and formed another shift here. Right? Price came back, formed another shift there. And price did what? Price came back and swept this, the high of the shift, the break of structure, as you can see, the second one, and created a new break of structure right here. And as you can see, we did not have a fair value gap, but we have a valid order block, which is 1 2, which is at this level. So what we would have done in this case, since there was no fair value gap, there was another block. You take it from the opening price of that order block. The opening price is the price used to form the order block. When this bullish candle closed, this bearish candle opened from this level and did the rest. So this is the opening price of this entire order block. So as you can see, we enter from that level. We keep our stop at the low of that level, and we target the 1:2, 1:3. Just target your risk tolerance level. So you backtest the setup and see how it works on you, and tell me how your first trade using the setup went. Don't forget to like, subscribe, and share the video to someone who will find it very useful. See you on the next video.